There are two other classes of assets, digital currencies like stablecoins, and there are also digital securities that are issued by entrepreneurs and companies. The regulators are going to shut down the digital securities. There's not really any support for them. And there's not any support for digital currencies either. They don't want large amounts of dollars to circulate outside the control of the US banking system. So of the three asset classes, the one safe haven for institutional investors that has the most regulatory support is Bitcoin as that king digital commodity. I expect that the rest of the crypto industry will continue to rationalize, and these other assets will gradually be decapitalized over time.
Hey guys, welcome back to Library of Wealth. Today we have Michael Saylor discussing Bitcoin in the digital asset landscape and where the crypto market is headed in 2023. Saylor notes that regulators may shut down digital securities due to limited support. However, he believes that Bitcoin, as a universally acknowledged form of digital property, offers the safest haven for institutional investors. Saylor emphasizes Bitcoin's uniqueness as a global asset that can be easily moved and preserved over a long period, making it an attractive option for people seeking wealth preservation. He also discusses how Bitcoin has outperformed traditional assets like gold, silver, bonds, and currencies as an inflation hedge, protecting wealth from the devaluation of weak currencies. Let's get right into the latest interview with Michael Saylor, as he gives his prediction for Bitcoin in the second half of 2023. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Well, Bitcoin represents the only universally acknowledged form of digital property in the world. So if you're looking to own a piece of property that you can move to 100 different countries where everybody in every country is going to want it, and if you want a piece of property that people will want in 100 years, Bitcoin represents that universal global asset. There's no building, there's no stock, there's no company, there's no commodity that will last 100 years that you can move from country to country. So for global citizens that are looking for wealth preservation over the next 100 years, and they're not quite sure about the economic policy of any country or about where they'll be, and they want something scarce, desirable, that some affluent person is going to want to buy from them no matter where they end up, Bitcoin represents that asset. I think that there's universal acknowledgement that Bitcoin is the king digital commodity. It's an asset without an issuer. And so for that reason, the regulators in the US aren't bothering it. I think the key to keep in mind is over the past 2, 4, 6, 8 years, Bitcoin is outperforming gold, silver, bonds, all currencies as a monetary inflation hedge. So if you live in the United States, the US dollar has been losing 7% of its value every year for 100 years. And over 100 years, you lose 99.8% of your value if you don't switch to a scarce, desirable asset. But if you live in another country, Turkey, Argentina, etc., in many cases, I think the Turkish lira has lost 96% of its value against the US dollar in just 20 years. So the real key is to switch out of the weak currencies, whether it's the lira, the Lebanese pound, the Argentine peso. But switching to the dollar is only a short-term solution, because holding the dollar more than a few years will cause you to suffer monetary debasement at the hands of that currency. So Bitcoin represents a way to buy a property that's going to go up in value. It's going to appreciate faster than the monetary inflation rate of either the dollar or local currency. And the other thing that's very appealing about it is you can take custody of it or place it with any number of international custodians. And of course, you can't really easily take custody of any other asset. So if you want to eliminate counterparty risk that comes from having all of your assets with a bank, or having all your assets in a single country, or all your assets denominated in a single currency, Bitcoin is a way for you to exit economically from that system and from those counterparty risks. The thing that backs Bitcoin is 400 exahash of digital power. To put that in perspective, that's as much power, energy, as the entire US Navy uses in its fleet, about 12.5 gigawatts. And also, it's a fleet of 5 million Bitcoin ASIC miners spread everywhere in the world that generate so much hash rate that if an AI took over every computer on Earth, all the smartphones, all the computers at Amazon, Google, and Microsoft, all of those computers couldn't dent the Bitcoin network. It's an extremely powerful digital energy network. And because of that, you don't have to put $1 billion in a bank that's run in Lebanon or Argentina or the US or Turkey. You can put the $1 billion onto the Bitcoin network, and the Bitcoin network is nation state resistant. If all of China turned every computer against the Bitcoin network, they couldn't stop it. And so Bitcoin represents a new way to store your assets, and in fact, the most secure computer network in the world. I think the key to keep in mind is that every citizen of the world needs 3 types of money. They need local currency, like you need the Turkish lira in order to pay your taxes and buy things locally. They want the world currency, the US dollar, to buy things internationally. And then they want a property that they can give to their children and their children's children that will last 30 years or 60 years or 100 years. Bitcoin represents the property. The US dollar represents the world reserve currency. And then your local currency is determined by the jurisdiction you live in and what your local taxes and your local expenses are denominated in. You don't need to replace the local currency, nor will you. And it's not going to replace the dollar either. What it's replacing is that building or that farm you are going to buy or that company you are going to invest in, or a bar of gold. And compared to that bar of gold, which is not going up in value in dollar terms, Bitcoin is actually outperforming by a factor of 100 or more. So Bitcoin represents that long-term asset, not your checking account or your near-term local payments. We live in a world today where AIs could spin up 100 million fake Michael Saylor accounts. And there's no cost to create a Twitter account or create another fake account or create an email account. So it's important that we actually have some way to anchor your account into cyberspace such that you have some substance. And the approach with Bitcoin is to take your credential, say your identity, your public and private key, burn the public key onto the Bitcoin blockchain, which is the most immutable, incorruptible, indestructible, immortal database in the world. And as I said before, if you wanted to corrupt that database, you would need an entire nation and you would still fail.
Saylor explains that Bitcoin's strength lies in its backing by an immense network of 5 million Bitcoin miners distributed globally. He notes that Bitcoin's network is highly secure and resistant to nation-state interference, with 400 times the hash power. Saylor also points out that individuals need 3 types of money: local currency, the US dollar as a global reserve currency, and a long-term asset like Bitcoin that can be passed down through generations. He highlights Bitcoin's ability to anchor and authenticate accounts in the digital realm, ensuring trust and authenticity in a vulnerable world. He believes that by outperforming traditional assets like gold, Bitcoin offers a secure means to store wealth and enjoy long-term appreciation in value. What do you think about Michael Saylor's outlook for Bitcoin in the digital asset space? And do you think we'll see a stronger push for crypto regulation this year? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.